Hello everyone, George DeSantis here with a look at the market for the week ending September 28th, 2018. As usual, we'll take a look at the disclaimer here. Urge you to read it since it will instruct you that this is not to be considered professional investment advice since I'm not an investment advisor. We'll start with looking at some weekly charts of the S&P, etc. Here's a weekly chart of the S&P 500. We can see that we've been in an uptrend for a while here since I would say about the middle of May when the 4 EMA crossed above the 9 and the 9 crossed above the 30. So somewhere in the month of May we started having this new uptrend, and that's been in place ever since. On the right side of the screen, which is where we have to be concerned about, we can see that we were riding this upper Bollinger Band. We were closing above the 4 EMA. And last week we had a doji, a very small bodied candlestick. It was actually a harami because this body of the candle was totally engulfed by the previous candle, which is very bullish. So that's a bullish harami. We can expect this thing to go a little high, somewhat higher. We don't know how high, but to continue to rally, to be an uptrend. So the 4 is above the 9, 9 above the 30. This is a 50 exponential moving average. And so we do have an uptrend according to the moving averages. If we go here, we see that MACD still shows us that divergence from price, because when price made a higher high, MACD is struggling to make a higher high than this one here, than back here in late January when we topped out. So we still have that sort of a cloud of a divergence and a bearish divergence of MACD. Everything else seems to be in place to have this market continue to go higher though. So we'll wait to see how significant this MACD divergence turns out to be. RSI 12 is above the 60% line, Williams percent R above 50, and so on. And the sum of the rate of change indicator above 4. Let's take a look at our daily chart. Here's your daily chart. We can see we also have a divergence here. We have a bearish divergence. We made a new high, a higher high than this one, and yet MACD made a lower high, and now it's trending below the zero line. So there's that bearish divergence here as well on the daily chart. But we can also notice that the 4 EMA is still barely above the 9 EMA, and those two are above the 30-weighted moving average. We are clustering here. We have some dojis. I suspect that after pulling back last week, see, we were closing outside the Bollinger Band, and then we pull back. But notice that we have those moving averages clustering near each other here. I believe we're going to find some support here. But we still have to keep our eye on this divergence of MACD, bearish divergence. Some of these other indicators, RSI 12, are still above 60 here. Williams percent are above 50, but the rate of change, some of the rate of change is trending up, attempting to get past that 4% line. So in summary, we have an uptrend on the weekly chart and on the daily charts, and we have one yellow flag we should pay attention to, and that is the bearish divergence of MACD from price of the S&P on both the daily and the weekly charts. Let's hope that that doesn't play out something which is a dark cloud. And here's a chart of the weekly chart of the S&P showing us the impulse indicator, where the bars are colored either red, blue, or green. And as you know, it's a censoring system, as Alex Elder puts it. He developed it. It tells us what we ought not to do or we shouldn't do. We shouldn't be selling short when the bars are either green or blue. We shouldn't be going short at all. In other words, we're expecting the market continue to go higher. Right now, last week's bar was blue. It's an inside bar, or we saw that it was a bullish harami, and you can see that here. And So we can see that the impulse indicator is telling us this market is bullish. Um, Below here, we have RSI. We have a Williams percent R above the 20% line. It's a little different from some of the other software packages where the numbers are just reversed or flipped. In any case, that's what the weekly chart looks like. Let's take a look at the daily chart of the S&P. And you can see that on the daily chart, we have a little more volatility. It's a shorter term, of course. So we made a high here and then we pulled back closer to the 9 EMA. And so right now we're getting blue bars. You're not allowed to go short. And that is telling us, look, expect some more positive things out of this market. You can see the moving averages above each other. And therefore, I would expect further uptrend. And here's a best choice chart of the S&P 500. It shows the regression channel. And you can see the channel is very narrow, very little volatility. The price S&P keeps bumping off the lower line and the upper line, like here, right? And so right now it's in about the middle. It's at 35%, 35.6 instead of 50. So if that continues, then we should expect another, upside, a little more upside to this market. Let's stop this and take a look at another chart. Here's a chart on Shaken Analytics. And we can see similarly here, we have this channel that Shaken developed themselves. It's proprietary to them. And you can see that it hits their upper line of the channel, of their channel, comes back down to the 21-day moving average, goes back up, comes back down. Right now it's sitting right there at about the 21-day average. So we don't have a power gauge because this is an ETF. There's no power gauge rating here, but you can see that the relative strength versus the Russell 3000 has been increasing. The market is showing us here, S&P, that the money is still coming in, but it's come down a bit last week as the market pulled back a bit here. And we're beginning to approach that oversold line of 30 again. So I'm thinking we get a rally from here. Now, if you look on the left-hand side of the chart here, you can see all those stocks listed from very bullish all the way down to very bearish. Well, we have 121 stocks in this spider that are either bullish or very bullish, 310 stocks that are neutral, and only 66 that are bearish or very bearish. That speaks well for the general trend of the market, I think. So what I'm going to do for the rest of this session is simply talk about a few stocks that either I own or I think look pretty good on the Shaken Analytics chart. The first one I have here is Stitch Fix. I owned it for a while and sold it, and now it's pulled back, and you can see that it went up. It trended up about 3.7% on Friday. So what you have here is an oversold condition. You have money flow looking very good. You have the relative strength versus the spider looking very good. We don't have a weekly power gauge yet because this is an IPO. So they don't have enough data to analyze that, but I like this one. Here's another stock that is listed on many of these lists at IBD, etc. And boy, does that look like a nice chart. And what you had here was a overbought condition. It pulled back to the 21-day average, and now it's off to the races again. It became oversold. See, I love this oversold, overbought indicator. I'm using it to great advantage now. Now you can see how the money flow is strong. You can see the relative strength is strong, and it's on a green power gauge rating, so it's bullish or very bullish. I like this one. I wish I had it. I can't own it. We can't own everything, but this is on my short list. Next one here is IDXX, IDEX Labs, medical products for the veterinarian profession. And you can see I own this one. It became oversold, and now it's off to the races again. It found support here at this 200-day moving average and at the 21-day average. As you probably know, I own Adobe, and I've owned it for a while, and it still looks very good. It became oversold here, see? Became oversold, and now it's working its way back up again. It's seemingly finding support at the 21 day and the 200 day average. So I own this one. Here's green dot, or the symbol is GDOT, and you can see a nice looking chart, and it is now oversold, but it went up about 1.18% on Friday. So you can see when they get to this 21 day average, they tend to rally from there. And then you have that oversold indicator here telling you, look to buy, look to buy right here, right here. Now, as far as these four stocks are concerned, FTNT, IDXX, Adobe, and GDOT, those four stocks, four of those stocks listed by IBD, for which they're expecting a 50% to a 267% growth during the next year or two, I believe it is. So I just looked at all of those stocks and came up with these four that have damn good looking charts. So put it on your watch list if you don't own them. I want to take out a few stocks, look at a few stocks that are listed on a recent publication of Fortune magazine. They consider these 100 of the fastest growing companies. And so of those, I made a short list of ones that I thought looked very well, very good, very promising on the Shaken Analytics charts. So let's start off with Adobe. You'll notice that Adobe is listed on quite a few of these lists. So Adobe is one. The next one is CNC, this one here. I own both of these. These are some of the fastest growing companies according to Fortune. And you can see I own this one. I bought it somewhere in there. But you can see it's oversold. Relative strength is very high. The only caveat here is that it was declining here in terms of its money flow. But other than that, it's been very bullish for a while. Very bullish. And here's one that seems very interesting to me. Yes, it did have a real problem here, pulling back that much. Since then, it's been rallying. It's got a alert here of a relative strength buy recently. In fact, either Thursday or Friday. But what I notice here is that it's now overbought, significantly oversold, I'm sorry, oversold. And these other indications are very bullish, and I think it's one to keep an eye on. Now here's Fortinet. We saw this on another list, and shows up again on this list. So when they show up on more than one list, it gets my attention too, Here's a stock on the same list of the Fortune 100 best performers, fastest growing, I should say. And you'll see that on this 5-year chart, Ulta had a tremendous run here. It's a cosmetic company. Then they had this falling out of bed here. But since then, they've been trending up. And I like how the 1-year chart looks as well. If we go to the 1-year chart, I don't know how soon it'll give it to us. But here's the 1-year chart. You can see the money flow. It's oversold, like the relative strength, and it's bullish or very bullish. Okay, folks, I'm going to call it a night. Go and rest these old bones and hope that I get over this pain that I've been having in my back and leg. So have a good day. I hope you had a good weekend. It's Sunday. And we'll try and do this again next week.